we have to go at the stock level entry. It is not the sector story. It is not the economy story. Currently, when the volatility is higher, it is all about the momentum. It is all about the stocks. Like in Hindi, we say that the Bahti Ganga mein haath dhona hai. So if there is a flowing river and you want to wash the hands, go wash the hands. The broader fundamentals of the company should be good. It should be a profit-making company. It should have the low debt. It should have a very good risk reward ratio for that matter, and very good price to earning ratio. And if all those factors fall into the line, the next best thing you need to do is to get into the stock. And once you have made money, just exit out of the stock. So exiting timely within this volatility is a good thing. You cannot expect to hold a stock for a period of say next say for example what we say that for the period of the next 6 months or 8 months, you could see the stock going up by 30% and then falling by 30%. You would have missed not only the time but also the money on that swings that happen. Just because the volatility is there in the market, you will see stocks going up and down multiple times over the month. So therefore, the story is getting into the best stocks, holding on to it. Once it goes up, book the profit, moving the profit that back to the gold. Profit component to be put into the gold. The capital can be rotated into the next trending stock for that matter, because every stock has a cycle of bullish, tapering up, and then bearish. So when you have bought it at the upswing, you have made certain returns, you have exited out of it, putting the profit back into the gold. And if the market is going down, go into the next stock, which is actually at its upward spiral. That will enable you to have a better cumulative returns on your portfolio and you to be into a command of your portfolio for that matter. So now this brings back onto us in current scenario. I'm not recommending any of the stocks out of this. I'm just citing this as an example as a layman. If you want to say optimist, okay, Rajat, I need to see what opportunities are there. Are there any really good buys, or is there any list I can then dig in, or I can see as a reference, because there are say 5,000 stocks and there are 2 exchanges. I'm not sure which one to jump into. So just let me give you an insight. Not only this is a recommendation, but will actually enable you to have an insight on it. So that is the stock opportunity. So here, if you will see that what we have done, we have taken here a filter where the stocks have fallen by around 5% and above over the last 1 to 3 months. Now, if you see this, we're talking about 1 week. So we have JSW Energy, which has fallen by 16% in a week. We have Coforge fallen by 15%. We have software like Sonata Software. We have Chennai Petro fallen by 17% over the last 1 week. And if we see 3 months period, it is 35% down, 35% down. Now, if you say that, okay, these might not be that good a companies, that is the reason why it is fallen. No, it is 35% down. Now, if you see that in a 1 year, it is still up by 21%. And if 5-year period you will take from 2019 till date, that means accounting for COVID also for that matter, it is already up by 200 to 300%. So even if you see the logically out of it, even after accounting for this, so that means it is actually 313% plus 35%. I'm just putting a rough number on it. If we are not concerned about the you can say it is absolute terms. In the absolute terms, I'm just knocking off it from the higher figures and adding it back onto the higher figures. So therefore, GSW Energy in the 5 years has gone up by around 700%. Now it has gone up by 700%. In 6 months, it is up by 38%. So that means if 6 months it is up by 38%, and in 1 week it has fallen by say 16%. So technically it was 38 plus 16, 54%. So it was technically at 54%. So now, therefore, if as a layman you need to a starting point whether I should go into this stock or not, and you want to research on the stock, whether stock is profitable or not, fundamentally strong or not, technical charts or not, whether I should put money or not. So you have this list, some of the good scripts that have fallen down over the last 3 months, and then you do your own research and then decide whether you are going to buy these scripts cheap or not. Because tomorrow, once the market stabilizes and the election euphoria or the uncertainty is over, these, even if they don't shoot by over 100%, they even recover back their 35-40% of the returns. You are home. To wrap up the things, in terms of the portfolio actionables, keep on going onto the stock specific theory, not sector specific theory. Some stocks are really doing good and are at the buying cheap. They have been corrected a lot. Go for very good buys. You can go to Polycab, had been a tremendous example based on that IT raid that had happened. Kotak had been a good buy. We have seen Vodafone Idea to a certain extent had been there, but since the whole market has been negative, it has put a downward pressure on all this for the vendor. But the point is, you need to able to have those distress buy for that matter into the equity, and this will enable you to make an entry into the stocks if you've not made it. But yes, at the same time itself, if tomorrow the results of election results doesn't come good, we can see a free fall into the market. But having said that, what does this mean? How can you distress or your portfolio from the potential negative return? So that means you need to have a very stable portfolio. You need to have a very stable portfolio, having the fixed bond portfolio, a fixed income portfolio. You should have the guaranteed returns assets in your class. So it is not only the equities based on which you will be trying to reduce the risk by getting FMCG or pharma stocks into it, because equity at the end of the day, investors get into the recency bias. Whatever you have been seeing recently, you think that the same will go. Now, if you see in last 1 week or a 1 month, a stock has losing 35% of the returns. And in the next 6 months, if the market doesn't move, you are not going to recover that money. So therefore, what does the correct is the better asset allocation that you should have. The money should be as per in sync with your risk appetite, time horizon, your financial goals, whether you understand that product itself or not. If every day you wake up in the morning and check your mobile app for the returns on the portfolio, then you are already into a mistaken place for that matter. Thank you so much. This is Rajat signing off. Have a great day.